Hi, welcome to another episode of Lending Insights by AllCloud. Funds are available at a much cheaper rate, and now deployment of funds also will happen very quickly. So I think liquidity is a challenge at both ends. Liquidity for the non-banking finance company is the crunch of liquidity. One of a good benefit of co-lending is that the ability to deploy these funds for the large lender and the ability to access funds in greater volume for the smaller lender. This is one platform where we're relaying our thoughts on what's happening in the lending industry, and specifically how we can add value to all these conversations around lending and hyperscaling. Today we're talking about co-lending. I think it's a very relevant topic for all companies that want to scale their operations, increase their loan books, especially non-banking finance companies who want to grow, and banks that want to partner with non-banking finance companies and smaller banks to further their reach in priority sector and also those markets that they are not able to capture. Co-lending is a very unique concept, and I think overtly or covertly things were happening in a certain way. But after the RBI's directive on co-lending, it's seen a significant interest and increased confidence among lenders to come together. So it's a partnership with benefits where all sides win, the large lender, the operating partner, and also the consumer. Because now the funds are available at a much cheaper rate, and now deployment of funds also will happen very quickly because the NBFCs and smaller banks have a lot of reach in areas where large lenders can't reach. So if you want to fund to priority sector, if you want to fund to sectors that are not easily approachable, co-lending is a certain and a short way of success. So I think liquidity is a challenge at both ends. Liquidity for the non-banking finance company is the crunch of liquidity. They need funds to further their operations. I would call them liquidity shortage. And then there are banks which have excess liquidity and need to deploy funds in areas where they have been asked by the regulators to deploy. That's the priority sector. And also the yield on the fund, right? If you are able to deploy funds more efficiently and at a rate that increases profitability, the problem of liquidity at either ends can be sorted. And one of a good benefit of co-lending is that the ability to deploy these funds for the large lender and the ability to access funds in greater volume for the smaller lenders or the operating partners. Technology definitely does enable scale, and if you have to hyperscale, the technology has to be fantastically efficient and easily integratable. And when you look at co-lending, both the partners have to work in the same, I would say, era of technology. You can't have a legacy system that does not allow you to integrate with partners. And then at the other side, if the NBFCs are investing in technology that is not able to efficiently make their space in the larger lenders' technology ecosystem, it will definitely not yield the benefit that they have actually started out wanting to do. So technology definitely enables a lot of scale, because now if you are co-lending, there has to be a greater transparency in terms of data and a lot of data enrichment, because it's a combined loan book that we're looking at. So both the lenders need to have full visibility on the borrower, the ability, the intent, and the capability to pay. Where the operating partner would go ahead and onboard customers seamlessly using fantastic and super scalable technology, all this data then resides into credit engines. They churn the data, they're able to find out insights about the borrower, evaluate, and then decide to lend. But at the end, all this data also needs to be shared with banks, because they need to be also doing a credit assessment of their own. As I said, it's a partnership where both the partners are investing together. Technology can enable the seamless transfer of data and also make it in bit-sized meals, I would say, for the larger lender to consume, because they don't need the entire data, but they need the most important aspects of it. And the operating partner should be able to give more information as and when required. So if systems are in place and they're able to communicate well using APIs that are widely available today, co-lending can be made more efficient. It can definitely be made more scalable, and the benefit that both the partners want can be achieved. Also for the consumer, because the consumer definitely is interfacing with operating partner, the consumer also needs to be kept updated. So You can't have a larger TAT for disbursement of loan, and if the processes on one side are digital, on the other side it is paper based, the entire purpose of co-lending and scaling with co-lending fails. The future of co-lending in India is quite bright because the regulator itself is providing guidelines and best practices, then in a way promoting it. And if lenders are able to take advantage of this current scenario, I think the future is going to be fantastically bright, and co-lending is going to be a part of every lender strategy that wants to scale. So we've been speaking to a lot of people, in fact our customers, and I think co-lending is always on their top of the mind, I would say. But then the challenge is that how do we get it done? That's where we come in. We've understood different systems, we've understood the entire flow of co-lending. We know how and where there will be teething issues, because today co-lending is still in its nascent stages. There's a lot of understanding to be gained, but it's a journey. And as we scale, as we grow, we learn more things about co-lending, and that's the learning that we're taking into our technology, our solutions. So what we could do, or what we're doing, is specifically learn, be agile, and develop the entire ecosystem or the platform that is required for lenders to work very efficiently on co-lending models. Subscribe to our channel and hear more about co-lending from us.